Okay, we'd like to reconvene after our closed session. And Council, if you could report out, please.
Thank you, Madam Chair. Board of Supervisors met in closed session today to discuss agenda item number 1 on today's agenda. The board met and conferred with its labor negotiators. Those negotiators were Allison Hauk, Dania Torres Wong, Ray Espinoza, Joe Paul Gonzalez, Melinda Casillas, and Georgia Cochran. The employee organizations discussed were the Institutions Associations, Law Enforcement Management, Management Employees Group, SEIU Local 521, the General Unit Employees, Deputy Sheriff's Association, and SEIU United Long-Term Care Workers Local 6434. The authority to meet can be found in California Government Code Section 54957.6, and at this time the board took no reportable action.
Okay, thank you. We'll continue with our now start our regular agenda, and our CAO Espinosa, if you can introduce item number 2.
Thank you, Madam Chair. Yes, this item's coming out of our clerk recorder's auditor's office, actually the auditing department, and we have Joe Paul Gonzalez here, our auditor, to give you guys a presentation, a PowerPoint presentation regarding AB8 property tax distribution cash flow model and information. So, Joe Paul.
Thank you. As part of, first of all, good morning, Chair, Board of Supervisors.
Good morning.
As part of the budget process, the CAO Espinoza asked that we do a kind of a property tax 101 presentation for the board. Talk about the major source of revenue for the county general fund. And I asked our Janet Norris of the auditing office, who sits in the position of the auditor accountant, but she has been, for all practical purposes, the property tax analyst, which was her previous title, and that's what she does for the on behalf of the county, the cities, special districts, and schools. So Janet will go over this presentation right now, and if you have any questions, we're both here to answer questions.
Good morning.
Good morning.
And everyone else. Okay, yeah, there's been some interesting information floating around recently on AB8, and I'd like to hopefully offer some clarification of what AB8 is and how it plays into the whole property tax picture. It could be a 3-day lecture, but I'm trying to compress it to about 10-15 minutes. So if I skip over something that's really you need to know, please ask. So the public's perception of property taxes, they pay their money, and then the money flows into this box at the county, and we call it AB8. But that's what they see. The money's flowing out, and how does it go to their agencies that serve their property? And what is AB8 anyway? It was Assembly Bill 8 in 1979, I believe. And it was a response to Prop 13. How do we divide up this tax money that has been suddenly restricted by over 50%? Actually 100%, seems like. The tax rate used to average in the state of California about 2.6% on property values. And after Prop 13, it was restricted to 1%. So everyone's budget was shrunk, and they had to come up with a way to equitably divide this reduced revenue for all the agencies that provided services. And that's pretty much what this says. What they did was they created a base based on historical levels of payment, and they just reduced it proportionally to this base amount, and they split the money out to the agencies that were in existence then at predetermined rates. And each year since then, we have built onto that base the incremental increase in values, and each increment is divided at a predetermined rate to those agencies in the tax rate area. So this AB8, this box, is really hiding a very complicated process going on. And the end result is the money gets split out to general fund, cities, and special districts, schools, and ERAF. This is what our constituents see, our property owners. They get their tax bill, and the bill is divided into two sections. The first one is what we call the 1%, and it doesn't really say where it goes, it's just 1%. And then in the bottom section, I don't know if you can see, here's the 1% here, and then the bottom section are the direct charges, and it says, if this was legible, you could see that the monies are going to specific bonds and direct charges for specific purposes. So we're going to focus on the 1%. The 1% is divided amongst the agencies that provide services to the property. And the properties are grouped in things called a tax rate area. And each tax rate area is a geographic area usually that shares a common group of service providers. So if you have property in South County, you're going to be paying to different schools than someone in North County. Now, we have 316 tax rate areas in the county currently. I didn't want to show you a list of all of them because you would never read it. It would be little ant tracks here. So I've picked 5 tax rate areas to show you as an example. And I've selected certain service providers. I haven't listed them all for the same reason, it's just too big of a list. And you'll see on this list that this first one, this tax rate area 2, right here, we have service providers, we have county services, we have fire protection provided by the county fire district. This happens to be a City of San Juan Bautista tax rate area. So the City of San Juan Bautista is providing city services. The K through 12 actually services are provided by Aromas San Juan Unified. And I'm sorry this is too dark to read. Down at the bottom, they're served by Gavilan Community College, and they pay into that organization. The next rows, you can see that there's a variety here, different schools. Here's one that's Hollister Elementary. This one is Bitterwater Tully. That's a South County TRA. Interesting thing there, people have asked, why does the county send money to King City High School? It's because the students down there go to King City High Schools, just the closest high school. And they also go to, where is it?
The very bottom.
Very, very bottom. Hartnell Community College. So we do send money, tax money, out of the county.
And this is
For the-
all on the 1%, the top
This
portion.
is all the 1% has to get split out to all these.
To everybody.
Yeah.
Now, when it gets split out, the split is done locally. So the money all comes into San Benito County, and then from here, it's distributed through the, our department.
Through the process.
Through the
Yeah.
process.
This is one process. There are several others that have to be, that are used for different role types, supplementals and those others. And we just don't want to go there. That'll be that 10th day here talking.
Very good, thank you.
Now, the interesting thing, and you'll see this in one of the next slides, but if you look across, you can see that the City of Hollister gets tax money just from one of these tax rate areas. City of San Juan gets from one. The county gets from all. Now, within those tax rate areas, there are predetermined allocation factors. So when a dollar comes in, again, let's go to tax rate area 00200. Right here, of the dollar that comes in, the county gets almost 17 cents. Fire district gets another 2 cents. City of San Juan Bautista gets 2 cents, or 20 cents, I'm sorry. The schools get 47 cents, and Gavilan gets about 7 cents. And if you look down through those factors at the different tax rate areas, you can see how the monies are split up. They're not always consistent. The general fund does not have a consistent, there's not a repetition anywhere there. All the factors are different. But it's the way AB 8 was originally set up. And that's what we live with. So then these are the percentage split outs. Now I'm getting a little more specific. I took the actual tax growth increment for 14-15, plugged it in that green bar at the top. And if you look down the rows, you can see now I've applied those percentages to the dollars of increment, and you can see where the new money goes. Increment is the new money that goes on top of the base. The base is what they got last year. Okay? And now you can start to see also, if you read across on general fund, you can see for a total, just for those 5 tax rate areas, there was an increase of $117,490 in tax revenues. And again, if you read across, Bitterwater, Tully, $145 increase. That's an elementary school, for those who don't know. Okay, so now we've rolled all this money up. The next step is to take the growth amount that I showed you in this last slide, and you add that onto the existing base that the agency got last year, or a couple of years ago we were subtracting. But this is a good year, we're adding. There is growth, there's positive growth. And what I wanted to show you here is, this is the actual calculation from this current year. So I have, and I apologize to those who are trying to read it on the board. If anybody wants a copy, I can print another copy for you later, just ask. General fund, you can see that last year, the prior year base was $12,026,052.61. That was the base. Current year growth.
We have a question for you.
Okay.
And if, you know, as you go through this presentation, if the supervisors have questions, please ask them.
Our base is our 10 or 11 cents that we always talking about. That's our base, correct?
Well, that's the percentage. The base is really the dollar amount now.
Well, okay, yeah, okay.
So-
So the 10 cents on the dollar, or 11 cents on the dollar that we're always talking about, that is our base, correct?
Well, see, that's
Joe Paul's shaking his head
the
no.
confusing part. That's what it nets out to after you do a lot of other gyrations, and I'll touch on those pretty soon. We're starting out here, I forget what percentage is, it's almost 20%, but that's not what we wind up with.
Because the way I look
Building
at it, it's
suspense here.
18 cents, or
You're-
18 or 19 cents, and that's I kind of had the same thought as Supervisor Munzer, is that, well, shoot, all this time, we've always talked about 11 cents on the,
Well,
we're able to
ERAF
use.
comes into play pretty soon, so
It reduces that down to 11.
they take a sizable
okay,
chunk.
good. So we're not misstating.
No. No.
Okay, good, all right. That's what I was worried about, too.
Okay, when are you doing your 3-day seminar?
We were talking about that earlier, that there's a marvelous summary. It's called Demystifying, and I've got it at the end, the last slide. It's a reference if anybody wants to look it up on the internet and read it. It's a summary of the highlights of California property tax system. It's 88 pages. And so I'm trying to summarize a summary, and I'm,
Okay,
Thank
all right,
you.
thank you.
you know, we're losing a lot of detail, but I'll try to fill, that's an important question, and I do have that one on a slide here soon. So we'll get back to general fund. Prior year base, 12 million, and this is before the ERAF split and all. This base kind of carries forward independently as a gross number. Current year increment, $900 and almost $50,000. So the current year total value, the new base, is $12,973 and some change. So then we get to the adjustments. See, you were right on my track of thought here. both the ERAF, which is the Education Revenue Augmentation Fund, it's a mouthful, and the former Hollister RDA are authorized to shift tax revenue from the other agencies. But these shifts are not part of this basic AB8 process, so they're an add-on process that comes later. So the result of that is we create this gross amount, this new base. We then shift to the ERAF and the RDA where that applies. And the end result is the amount that we then use to create the AB8 factors. So here's, I've gotten rid of the first couple of columns and I've shifted that total over now. So you see general fund has a $12,973,000, which is the new base. There's an ERAF shift of $6 million. And the adjusted AB8 dollar amount after the shift is $6,943,088. We do that for all the agencies. You can see ERAF, who they shift money from in this table. And down at the bottom, you can see that amount showing up. It's a positive amount. ERAF now has some money. Same thing with the RDA. Now, RDA is interesting. There is a shift, but then there are certain agencies like the county who negotiated a 100% shift back. So we do not, the county does not shift money to the RDA. But you can see that City of Hollister gives up almost $1.5 million. Hollister Elementary, San Benito High School all shifted quite a bit of money to the RDA. And that's their net effect of the shift. So after we've done the AB8 calculation, we've done the shifts, now we get an adjusted AB8 dollar amount, and then it's a simple matter of division, taking each agency's share, dividing it by the total amount at the bottom, the $63,511,000, and creating a factor. And that's where the AB8 factors come from, in a nutshell. So how do we use the AB8 factors? People like to compare them to other counties, and then my question is, did they calculate theirs the same way that we calculated ours? We do county. Do we include fire? The county fire, is it not? I use them.
So are you saying when we sit there and say we have 11 cents on the dollar and County X gets 25 cents on the dollar, they're doing this
They're doing the
differently?
I think they, well, when I look at county fire, I just wonder if they have county fire, are they including that in their gross number, or are they splitting it out too? I don't know.
Okay, all right.
I don't get into comparing, I just try to send the money out accurately. I use the factors then, when the money comes in, rather than trace down every one of your bills and say, okay, you've paid your amount, so now I can pay your agencies. That's pretty complicated, even for a small county like this. We take the AB8 factors, I collect $10 million, or our treasurer collects $10 million. I take that money and apply the factors against it and say, here's your share agency. And that's what I do with the factors. Any questions, further questions? Anyone else?
Go ahead.
Janet?
Yes.
We have our accountants, right? We got you, we got Joe. The receiving agency, they have their own accountants to make sure that the money we send them, that's the money they're supposed to get.
I don't know if, I mean, whenever they ask me a question, I try to answer it. I provide whatever information I can. I don't get too many questions on the calculation. I don't know if they could duplicate it.
I mean, we're doing our part. We're doing our due diligence from the county perspective. We are. It's just a matter of a receiving agency, if they're doing theirs. That's all.
Yes, I don't know if they could independently verify that. Do you have a
Well, I just wanted to add that the State Controller's Office audits the county's property tax system. And in the last audit, the audit came out clean except for the lingering 1997 ERAF issue. So, you know, the State Controller's Office, for the most part, ensures that our property tax allocation is accurate.
Thank you, Joe Paul.
Can we change any of these percentages?
No, I had the fire marshal from, or the guy from CAL FIRE came in a few years ago, and he said, this just isn't enough, you've got to change these factors. You know, they're set by statute. I would say by statute. I don't know if it's by statute, by practice or whatever, but the state has told us that those are the factors. You don't mess with them. You know, if we have an agency give up a responsibility, you know, we start creating new TRAs with new services. Maybe a city takes over a county property, annexation, things get changed then, but it's still all done according to a very set procedure.
So the AB 8 factors is pretty much set in stone.
Pretty much.
Okay.
I mean, the state says this is how you do it, and this is how we calculate it.
All right.
That's it.
It's
And
interesting.
this is the exciting bedtime reading, in case you have trouble sleeping, the demystifying the California property tax system. So it is a very good summary, but it's hard to read even if you're into property tax. Sorry about that.
Right. Yeah, just a thought.
Guaranteed to make you go to sleep.
And you had a question?
Excuse me, but we don't take questions.
I'm
You
sorry.
have to come up. We will take questions, but only after the presentation is done. But thank you.
Okay, I'm sorry, I used to do
No,
sales
that's okay.
presentations, and I always
We
look for
have a
questions.
protocol, and so we will have the audience come and ask questions or
Okay.
address the board later.
Okay,
So, go ahead. Are you,
That-
that's it? All right.
okay, thank you.
Well, thank you. So, Joe Paul?
Well, as I said, this was Property Tax Administration 101. It's a very exciting subject. Unfortunately, as Janet mentioned, you really can't change those percentages. That's what the State Controller's Office comes down into audits to make sure that we're following those accurately. And in fact, it was one of those little factors there that was inverted that caused our long-standing ERAF issue, you know, all these years later. It started off with a $1,500 error. And as you know, it ended up being over $4 million. Those little factors mean a lot.
They do.
Well, who set those percentages to begin with? Was it the state legislature?
Well, it was that legislation, AB 8, that legislation, what happened at that time was the Board of Equalization came down to the counties and they said, well, let's take a look at what you were collecting. What the schools were collecting, what the county, the cities, special districts, and let's put all those amounts together and let's scrunch them down so that they equal 1%. And so, you know, each agency ended up with a factor of what, what 1% looked like. And so that factor then was used to multiply against, tax revenues that were being collected. And so it was a huge hit back then. And I know that our assessor is present today in the audience, and he was around back then when they were, where this transition took place, and was a big, was a big deal because schools could not afford to, teach students. The county could not afford to provide services, neither could the cities. But the state said, well, the schools are their primary obligation, so we're going to, we're going to take money back from the cities, counties, special districts, and we're going to give it in the form of ERAF to the schools. And that's how we ended up from being a 19%, where we're collecting 19% of the total taxes, and we only end up net about 10% for, of total tax collections. At least the county percentage.
You have a question, Supervisor Patel?
No, just a lot of thoughts.
You have this perplexed look on your face.
Yeah, well, it's, all these are pretty much, all of them are special districts, and, and it just seems like, the San Bernardino County Water District has about 4 or 5, 4 different areas that they're collecting taxes or adjusted AB 8 factors, and, and they are able to control some of their revenues with rates, from user fees and things like that. And it would be nice to have, maybe changes of percentages based on need. And, this was set quite a while ago. And how often does that ever get looked at?
I think
And
that's
as
what
population shifts and things. And
Howard Jarvis would disagree with you.
he probably would. Thank you.
Okay.
Yeah, go ahead, Supervisor Munson.
And again, I probably have this wrong, but Joe Paul, I think what I heard was, I know there's a lot of criticism over all of our school districts, the different school districts we have, and many of them are in District 4. And Bitterwater Tully is far in the south of the county, so far that it ends up being this King City's high school district. So, but if that district was to go away, what I think I heard today was its money, and I'm looking on one of these pages, and it has a $24,000 that it receives. That money would just be shifted basically to the next school district up north that would assume it.
Well, to whatever jurisdiction will assume, will assume the services.
Yeah, so Jefferson is the next one north. So it would, that money wouldn't, if we dissolve that school district, the money isn't necessarily saved. It just gets shifted to another school district that would
It's to that
absorb-
service provider.
Yeah, so that money's not saved, it just gets shifted.
That's correct.
Okay. All right, I'll go ahead and open it up to the public now. This is the time to come up and maybe present some comments or questions regarding this item. I know we have one speaker card at this time.
Yes, Madam Chair. Marty
Richmond?
Richmond, I'm sorry.
Okay.
Sorry, you can't read my writing. Sorry. That's cool.
I know you're gonna, don't forget to run the timer, because I run over. First, let me start by thanking Joe Paul Gonzalez and Janet, who have been kind enough over the years to supply me with essentially the same information you got today. And I try to explain it in a simplified way. In a couple of articles I wrote, I did not go into the TRAs because, can you imagine? Our county has over 300 of them. And I talked about the fact that the state of California has over 5,000, between 4,000 and 5,000 taxing entities, okay? So if our small county has 316, whatever the number is, you can imagine how many there are in the state. Anyway, it's like a paycheck. It's not what you make, it's what you get to take home, and you get to take home 10.9 cents. On the, so I just want to clarify that for the folks back home. You get to take home 10.9 cents on the buck. And every county is essentially different because they're organized different. And when the state came down and said, let us tell you how your county is going to break up the funds, what they did essentially was look at the status quo of how you were doing it the day they showed up. And however you were doing it the day they showed up, they locked that in forever. And the reason it's forever is everybody who's making out in this system, and there are some people making out pretty good, because every county is different and every entity is different. The ones who are making out, they're never gonna vote to change it. Okay? The ones on the short end of the stick, they always wanna change it, but if you change it, you gotta get the money from the other guy. And the other guy is saying, well, I'm not voting to change this, I'm perfectly happy. The only thing I would have added to this presentation, I know it's complex, and they do a good job of trying to explain it. The only thing I would have added is the understanding that everybody measures it differently, but actually putting up the difference between the 4 or 5 major categories from county to county. It's interesting to look at how some counties have a huge amount going to the county and have a small amount going to the city. There's a couple of counties that have no cities at all, so they have 0 going to the cities. And then it's important for the public to understand that ERAF is essentially an education, so it's essentially a school, even though schools may be listed differently, and that RDA is essentially a special district, no matter what else you want to call it. And so the biggest single receiver, when I did the calculation in the entire county, was the San Benito High School District, which I at that time was getting. I didn't look at today's list, I assume it's the same. I was getting about 17 cents or something on the buck. And I will wrap up by just saying that the RDA is not, as pointed out, Janet pointed out, the RDA is not taking any money from you, but it is taking it from the state. Thank you for your time.
Thank you, Marty. Okay, anybody else from the public that would like to ask a question or address the board on this item?
I just wanted to add that San Francisco County, which has always been a county that spends a lot of money, for services, gets 76.6% property tax. Of the 1%, 76.6% goes to San Francisco.
So if you compare it to San Benito County, they get that, we get 11, or almost 11%.
Right, that's the comparison.
Okay. All right, well, thank you.
How do
Any
they
other
get- Oh, I
questions?
got a question on that. How do they get away with that, with their schools? Don't the schools automatically supposed to get half?
Well, they get 30%. San Francisco Unified gets 30%, and the community college gets about 6%. What I'm not seeing in this report is the ERAF associated with that. But, that's at least the gross number.
Yeah, wow. We could solve a lot of problems with half that.
Yeah. You may come up. You may come up, Marty.
I don't want to criticize Joe Paul because he knows more about this than anybody, except Janet.
Janet
knows
Janet.
more about anybody in the world. I think there's something important that I noticed when talking about San Francisco, so I want to ask you a question. You have to remember, San Francisco is a city and county together. So basically what you have to do to rate San Francisco versus, let's say, us, is you have to take the city rate and the county rate and put them together in San Francisco. And if you come to San Benito County, you have to take the city rate, the actual net rate, 10.9%, and the county rate, the county rate, 10.9, the city rate, 4%, and put them together. By the way, when you do that, you're going to find a very interesting number, because I did it for the entire state. San Benito County has the lowest combined city-county rate in the entire state of California. Let me say that again. San Benito County, when you take the county rate and add the city rate, and which you have to do to compare to San Francisco, because they're city and county together, has the lowest city-county rate in the state of California. Thank you for your time.
Thank you, Marty. Anybody else? Okay, I'll bring it back to the board. That was a presentation, and if there are no further questions, we'll,
I've been sitting here for about 11 years, and this is the most I've learned about, the the mechanism of how that property tax is distributed, and was a great, great presentation. I really appreciate the effort put into this report.
Yeah, Janet, thank you so much. On behalf of the board, that was a great presentation. Joe Paul, thank you. And thank staff if there were others involved. It was wonderful. Okay, we'll go on to item number 3.
I likewise like to thank staff as well for the work that they did. And one of the reasons why I wanted to bring it to the board's attention as well as the public and staff's position, to share this with them is just the difficulty with regards to budgeting. And I think people need to understand, the amount of money that actually comes into our county is very low. And especially when you look at both, city and county, that's just extremely low. So we have to do some work ahead of us here in the next 5 years to put a plan in place to account for, our operations here in the county. So we're going to see a little presentation later about that and talk a little bit more about it. The next item on our agenda is regarding budget policies. We talked about this at our last special board meeting. Melinda was able to work with the chair, Margie Barrios, on this. We made some edits. It's posted in our agenda. And so we have Melinda here to discuss those changes. Melinda?
Good morning. So the next item up is the adoption of the budget policies. We brought these to your board at the last budget meeting in April. And we worked with Supervisor Barrios in putting together the budget policies, putting together the language to make it sound a little bit better. And so the budget policies are for you this morning, or before you this morning, to adopt. I don't know if you want me to read each of those policies, or if you've read them and have any comments and would like to go ahead and adopt them, or I'm not quite sure how you want me to approach
I just want to
this.
say that from the last presentation of the policies, the numbers have not changed. All we did was just rearrange how the wording
Some of
was
the wording,
on the statements, but other than that, everything else remained the same. And there were no deletions of the policies or additions. So,
There was just some clean up language.
okay, there's a motion. Second. But you know what I probably should do at this time is ask the public to see if there are any comments before we take a vote and discuss it up here. Anybody from the public would like to discuss or address the policies? Okay, I'll bring it up. Any further discussion on the motion and the second? Okay, all those in favor?
Aye.
Aye. Opposed? Motion carries. Okay, item number 4, CAO Espinosa.
Yeah, thank you, Madam Chair. Yes, this item, both staff and the auditing department have been working on looking at accuracy. Over the last few years, during the budget process, budgeting has come in as X with a higher staffing level than normal, or during the actual year's budget, we actually have Y, or a smaller amount of employees. So really, this has proven some difficulty with the accuracy of the budget. Historically, we've had a vacancy rate of about 8 to 10%, and in order to fill key positions this year and really being more accurate with regards to the budget, we're planning on implementing a vacancy budgeting. So today, Melinda's put together a PowerPoint presentation for your board and the public to discuss this, to kind of go over the history as well as kind of where we're at today with regards to vacancies. So, Melinda?
Okay, I wanted to give you a little bit of history regarding the vacancy and vacancy budgeting. The county enacted a hiring freeze during the years of the Great Recession, and beginning with fiscal year 13-14 budget, the county began to gradually add new personnel in key areas in the general fund. Simultaneously, the county has experienced difficulty in recruiting for a number of these new or recently vacated positions. The effect of these vacancies has become a factor in our budget process, and we are allocating valuable resources to these areas while our county continues to struggle in other areas, and we need to recognize this issue. These positions are important to providing much-needed services, and we don't want to reverse the carefully debated decisions to provide the funding for them. Currently, in the general fund, and this speaks basically to the general fund, there are approximately 20 positions that have been vacated for at least 9 months. The average cost of a position is roughly $85,000 with benefits, and so the total cost of this vacancy is approximately $1.7 million, and that produces a vacancy rate of approximately 10%. So our concept in vacancy budgeting is that each department is given a salary budget that includes all their authorized positions, whether or not they are currently filled. An offsetting budget is calculated at 8% of the total salary, medical, and PERS benefits. At the end of each quarter, every department will be analyzed to determine what portion of their quarterly sales and benefits have not been used, and that unused portion will be moved against the offsetting budget. An example of this, one is an assistant CAO position. The annual salaries, including all the benefits, is roughly $225,000. The quarterly cost is approximately $56,000. Let's say we also have an associate planner whose annual salary, including all benefits, is roughly $85,000. A quarterly cost would be $21,000. Both of these positions are vacant from July to September. And we started out with a vacancy budget of approximately $1.2 million. We're going to move the quarterly cost of the assistant CAO against that $1.2 million, and also the quarterly cost of the the associate planner of approximately $21,000. So this reduces our vacancy offset budget to now $1.1 million, and we will continue analyzing each department on a quarterly basis, and our goal, what we anticipate, is that our vacancy offset will be 0 by the end of the year. That still allows all the departments to go ahead and hire for that position if that comes to fruition. But if for some reason that doesn't come to fruition within the quarter, we will then take the savings of that position and move it against the vacancy budget. And we're anticipating that at the end of the year, that vacancy budget will be 0. Any questions?
Any questions from the board at this time? No? Okay, I'll open it up to the public. Any questions? Marty?
Marty Richard from Hollister. My comment is that I'm assuming those positions are in there because we need those people to do the work. Otherwise, positions would have been eliminated. So if we keep them open and they don't get filled, we still need the people to do the work. So we have to find out some way, if it's a valid position, we have to find out some way to do the work with the existing people we have. So rather than just zero the money out, I think you ought to look at offsetting it with some kind of professional development. If we have some employees not at the level we need them, but we're short other employees, I think the money would best be used, and I've talked about this at the city many times, to basically upgrade the employees we do have who do a good job, but perhaps need some professional development help to be able to move up to the next level. You may have some potential employees, I'm not talking about anybody in particular, who essentially need some additional training or some additional education or whatever it is to be able to get to the next level. Because I think we've seen how important it is that the key department heads be well versed in their jobs. And professional development, normally if you got too much stuff coming across your desk, you don't have time for that, and we don't budget that because we're always short money. Rather than just letting it go away because we happen to overload the people who are left, I think you ought to consider using it to upgrade their skills somehow. And that might be too complicated for this particular thing, but eventually in the budget at the end. Thank you for your time.
Melinda, I have a question. On the example part of it, the vacancy offset budget of 1.2 million, that would be the budget, that would be all the departments, those vacancies added up together. Is that correct?
Yes, basically what we're planning to do is, in our previous, and in the current vacancies, it's approximately 10% right now. We're going to reduce that to about 8%, give us a little bit of cushion. Each of our departments are too small to decide that we want to take 10% out of each budget. So we're going to approach it on a global aspect for the general fund. And the 1.2%, the million two is basically taking our salaries, our medical insurance, and our PERS, adding them together and applying 8% to that.
Oh, okay, so those are not the vacancies, that is the percentage. That is the 8%.
Right.
That's the goal.
Right.
At this time.
Right.
Okay.
It's not a goal that we're looking to not hire people
No,
or
but the goal
right.
to have that as a,
Right.
you know, be
We
offset.
just see a trend that
Exactly.
there's approximately 8 to 10% of positions that are not filled. That could be that a person is currently hired and they retire or resign, and it takes a while to then fill that position also. So we're not discouraging anybody from filling their positions by any means. We want them to be filled.
Right.
We
Well,
just
I think
see-
that's my
Madam Chair.
concern is that it kind of, you know, I mean, this is great that we do this, but those people are needed. So I agree with Marty that those positions obviously are open because, we're recruiting because
Right.
they're very much needed in the county.
Right.
So now they're not filled, do they go away? Do we
No.
later on say, okay, we have somebody available now, what do we do then? How do we reverse this action? Go ahead, CAO.
Madam Chair, I was going to add is, you know, this is really, you have natural turnover. So there's people retiring, there are people that are getting new jobs, maybe at a different county or a different, in the private sector, whatever it may be. So there is a gap in time where we're not able to hire. So that's what we're trying to obtain or get those savings from. We're still going to be doing the hiring process. In addition to that, this year, just with those 20 individuals, and I don't think it's there, basically it's about $500,000 for those 20 folks that we have on the books trying to hire for their benefits. So Melinda is actually calculating the full benefit because we don't know what those individuals, are they going to have a full family? Are they going to be single? We
Right.
don't know that until they get hired on. We don't know who those individuals are, but we have to budget for it. So those are the savings we're trying to extract and put to use, basically.
Okay. All right. Any other questions? Supervisor Patella?
Yeah, I'm just happy that we're doing this and identifying, you know, this into the budget. And, you know, just to clarify for the public too, that these, you know, unfilled positions, maybe some folks may feel that they're not needed. They are desperately needed. And, you know, the work is only getting done by, you know, very dedicated individuals that work for the county. And through overtime and really putting in a lot of their own hours too. And also, some work's not getting done, and that's why we definitely would rather see these positions filled than not filled, certainly.
Right. I agree with you, Supervisor Patella. That's important. Any other questions? Okay. And is there any action on this item? It doesn't appear that, approve the inclusion.
I'll
So-
move per staff recommendation.
Okay, there's a motion
Second.
and a second. Any further discussion? All those in favor?
Aye.
Opposed? Motion carries. Okay, item number 5, CAO Espinosa.
Thank you, Madam Chair. Yes, this item is a presentation to your board and the public. We are now a year or thereabouts, actually, it was 2014 fiscal year. So we're getting close to a year into our new financial system with the financial management, the FM part of that module, as well as the payroll and HR that was implemented this calendar year in January. So Melinda has been working diligently with both systems, BITEC system and the New World system that we have. And this is the first year, we're very excited, the first year that we're actually using the budget module. So Melinda has actually taken it upon herself to enter almost all of the departments, actually all the departments except for Health and Human Services, into the system. So she's going to talk a little bit about that. We're going to look at the feel of it. There's obviously different charts of accounts, so the numbers are a little bit different. So it's going to be a little bit different on the look and feel of the presentation of the budget itself. So we wanted to talk a little bit about that, as well as the budget from a high level, kind of what we're going to be recommending to your board come June the 15th. So Melinda's here. She has put together a PowerPoint presentation to kind of outline PCNs and other things. Melinda?
Okay, so as we speak, we are also working in our new ERP system. And I just want to say that real quickly that Ray mentioned that the budget is currently in the ERP system, and I want to thank the Human Services Department, John Miguel and Francis Marshall. They picked up and put in the Human Services budget for me. Was getting a little crunched on time, and so they offered to help me with that. So I just want to say thank you to them for doing that. So this year we have some changes in the way our budget is going to be presented. The first thing that we'll see is, first of all, we have a new ERP system. This was our old BITEC system, and then we now have a New World system. So we don't just have an upgraded model, we have a totally different cart, so to speak. And we're very excited about these changes that are taking place. But they come with a lot of learning and a lot of changes. So we now have something called position control numbers, which we did not have previously. And these are authorized, every authorized position has a position control number. Oops, I'm sorry. The first four numbers of this position control number are the home department. It represents who's responsible for this department, for this position. And then we have three more numbers, which is the title of a position. And then finally, the last two numbers of this position control number represent how many of these positions, the three P's before you, are in the entire county. So for example, in the auditors, in the CAO's office, we have a position number 1010-209-01. 1010 represents the CAO's office. 209 represents the county administrator position. And then 01, we have one of those in this county. And so we will then attach the name Ray Espinoza to that position. So when you see the authorized position this year, you will see position control numbers associated on the list of authorized positions. And I wanted to make a note that we're getting a lot of questions because this is a new concept for all of us. And so for the departments that are here, I have a sheet up on the front table that kind of answers, I hope, some questions that people are asking about the position control numbers. So feel free to please take a sheet. Okay, so then next off, our consent agenda, or our budget agenda will look a little bit different too. Let me see if I can real quickly bring that up. I put a copy in the packet, but I think I also have an agenda outline. This is a draft. In previous years, where are we? Can't seem to find this. Payments. Sarah. Can you scroll this down for me? Okay, so basically what I wanted to say is that each, on the consent agenda and on the regular agenda, it will be classified by departments. So for example, the County Administrative Office is Department 15, and so all the departments that the County Administrator is responsible for on the consent agenda will be presented at one time. We're not going to intermix departments throughout the agenda. The same with the county auditor or the tax collector. And then also on the regular agenda, we're also going to presenting the regular agenda also in order of department heads. So everything that the county administrator, number 15, is responsible for, those will be presented at the same time. So it's just a little bit different than we've done in the past. We're going to present everything by department. And then if you look, say for example, on item number 44 of the draft, 15, the number 15 represents that the county administrator is responsible for this budget. And then the next number, 1005, clerk of the board. The clerk of the board now is the new budget number. We don't call them budget units anymore. Under BITEC, the clerk of the board was budget unit 102. Now they're called divisions. And so now the new number is clerk of the board is 1005. So I just wanted to tell you that there's going to be a couple of little changes to the budget hearing. The budget hearings will still be the same. There will be consent items and regular items for discussion, but just a slight change in the way that it's going to be presented. And then finally, under presentations, on our presentation of the budget, and this is probably the biggest change. Is in the line item details, the things that you will see on your recommended budget. So as we speak, the recommended budget has been entered into the ERP, and this is something that has never occurred. Once the budget hearings are over in June, we will advance the recommended budget to the adopted budget, and departments will be able to see their budgets from July 1st. We have not ever had that before. We have not actually had a budget in the system as we work on our budget. So this
Madam Chair?
accomplishment
Yes.
provides some different things to us.
The
Melinda?
CEO has a comment?
Oh, I'm sorry.
Thank you.
I was just going to say, this is a phenomenal feat. This is
It
really,
is.
really incredible. I can tell you right now, Joe Paul and staff, Melinda, a lot of the individuals upstairs have put a lot of time into this. And it's a milestone because I can tell you, a lot of the departments, when they come in, come July, August, September, October, November, December, they still don't have the budget in the system into BITEC. So it's hard for them to know where they're at financially. There have not been any checks and balances within the system to know if they've been spending more or where they're at within the budget. So this is huge. This is going to be really, really big because we're entering the data, we're entering the budget in the system. So when they start doing actually running reports or these types of things, it's going to be immediately at their fingertips and they can manage the system a lot better. And we're going to also have checks and balances where we can't go over and those types of things. But I just wanted to emphasize that. It's a phenomenal feat, and it's definitely a lot better, and we're going in the right direction.
Yeah, and I appreciate that, and I think all of us do. This is not, I mean, we're getting this presentation now, but how long has it taken us to get here? I know it's been at least a year, possibly more. So I want to thank the staff, and I know the board up here really appreciates the work that has been done to get us where we're at. And I also want to commend the folks that worked all Memorial Weekend, the 3-day weekend. They were here so that we could get this presentation today. So thank you, Melinda, Joe Paul, and others, that CAO Espinosa, and I'm sure there were others, maybe Sarah.
Sarah.
I think Sarah was also working. Yeah, so thank you for where you're at now. So go ahead.
Okay, so being able to put the budget into the system does a couple things for us. Number one, we don't have to enter everything into our Excel spreadsheets anymore. Although this year we did a combination of Excel and the ERP because the ERP doesn't have a lot of history in it, and we wanted to provide you some of that history again this year. And so that's a really good thing. That's probably number one. It increases our accuracy over the Excel method. We had to make sure all of our columns totaled correctly and that we weren't forgetting that we didn't have some total issues that didn't carry over through the entire budget. So we're very happy about that. Also, the budget doesn't, because of the input of the budget, it doesn't produce exactly in the same format as what we're used to. So that's taking some learning to get used to. On the other hand, it doesn't provide us the same budget format that we're used to, and we'd like to take that as an opportunity to grow and learn new things. So what I'd like to show you is that previously this is what you saw on your recommended budget. You saw all your line item details. I'm going to show you if I can find it here. I'm going to show you what you normally saw. You saw all the details where you could see what the salaries were, what your temporary salaries were for a budget. For example, let's look at the CAO's office. You could see what your regular salaries were, your temporary salaries were going to be, your overtime wages. You could look at all that detail, and then you would have under here, you would have a sum total that would tell you all those things came to $734,000. And then you could look at, you could look at your services and supplies, and you could see how much we're spending on books and subscriptions, or how much were the CAO's office spending on communications, what we're spending on professional services. And so you would get a sum total of roughly $26,000. However, now, because of the way that our ERP is set up, you will only see those sum totals. So you will see under salaries and benefits a sum total of $734,000. You will not see all of the detail that goes into that $734,000, and the same with services and supplies. You will not see all the detail that makes up that $26,000. It's in there. It's in the system. It's the way that the computer system prints the information out. It just gives you total information. So what we wanted to do this year, because we don't have a whole lot of history into the current ERP, we wanted to still provide you some of the same information that we provided you in the past. So we manually went through and so we downloaded the budget numbers into an Excel spreadsheet. And then we also included 13 totals, actual information, because that is not in the ERP system right now. The 13-14 actual information is in the computer system. The adopted for 14-15 is in the computer system. So far we have two columns that are in there and one column that's not. We did a new thing called status quo this year, where we try to compare knowing what salaries were going to cost us. We put that information in, and then also we kind of targeted a 3% addition to services and supplies. So we have a new column in here this year that's called status quo. And then the 15-16 requested is currently in the computer system. And then what we're also recommending for, based upon requested information, what we're recommending for 15-16. So anyways, I just wanted to let you know that your budgets are going to look completely different this year. We're excited about that. I know that that's a big change, and we want you to be excited with us too, because we feel that this is just a huge accomplishment for the entire county.
Madam Chair? if I may.
Yes, please.
I wanted to add to that is next year, I think what we want to do is fine tune that a little bit more as well, and actually have set up to where we can actually create these reports a lot easier. Put the, create the budget in a lick of a button pressing. But one of the things that we want to make clear is that we want to make this as transparent as possible and have all the information there for the board as well as the public. So we've actually brought in OpenGov, which will be able to put all of our information into or available to the public as well as to the board. At their leisure, they can take a look at what our expenses are or where we're at with our revenues. So I just wanted to be clear is that we're going to continue to work on this. It's going to continue to grow, and it's going to continue to get better. And I think probably the next special board meetings next year, I think what we want to do is sit down and probably spend a little bit more time with this and look, get guidance from the board as well as the public on how much information, what we want to put on here. But I think that it's definitely going to be a lot easier to get that information in there. So I just wanted to make sure that the board was aware of that.
So yes, this is a work in progress, and this is what we were able to, this was a big step for us to put as much information as we have in there for this year. Next year, the ERP will have even more information, but we just wanted to at least give you an idea of some changes that are going to be coming in the next couple of weeks. Any questions?
Any questions from the board on this item? I will open it up to the public. Anybody from the public that would like to address the board on this agenda item? Okay. I'll bring it back. And I think this was just to receive and information, discuss it, ask questions. So Melinda, thank you. And thanks staff for such great, accomplishment.
Well, I think there is also a part 2 to this, right, Melinda? The budget overview?
Yeah. So then we wanted to give you an overview of where we currently are in the fiscal year 15-16 budget. So we will be presenting a balanced budget to you. In the general fund, it'll be approximately $40 million in revenues and incoming revenues, and $40 million in expenditures. All the other funds will total approximately almost $48 million. New positions that are revenue offset in the general fund are approximately 7. There's revenue that will be used to offset those positions. And then positions that will not have any revenue, that are just general funded. Out of the general fund without any revenue to offset those are 4.2. And in all the other funds, approximately 9 new positions, and all of that revenue, all of those new positions are offset with revenue. Some of the new positions, obviously, the budget is still, we're still not out of the woods, and the budget is still tight. Unfortunately, we were not able to fund all the positions that were requested, and currently, as of today, these are the positions that we will be funding. The positions that are revenue offset, there's an IT position for Health and Human Services. There is another auditor accountant in the auditor's position. Department. The assessor currently is scheduled to receive 1.5 positions. Clerk recorder. Probation is asking for another position, plus they're doing a reorganization. OES is half a position, that's bringing somebody up to a full position. Gang prevention is the same thing. There will be increasing 1.75 position to a full-time position. And then we have a whole reorganization with the RMA that should increase their positions by about a quarter. The positions that are not covered by revenue, we're looking at 3 in the Sheriff's Department, bringing an HR analyst technician up to a full position, and then a maintenance person. That will also help to address some of the issues that are happening in the jail and the juvenile hall. Other funds, Human Services is asking for 6 new positions, Public Health for 2, and Mental Health for 1 new position.
Madam Chair?
Yes.
Some
Our
vehicles.
CAO has a question
Sorry.
or a
A
comment?
comment. I just wanted to highlight as well, in our prior special board meetings, we actually had a layout, a timeline of the budget process, and in there was a section that of notifying for layoffs. And I just wanted to make sure the board and staff and the public are aware there are no plans for layoffs, so we're not going to go down that route. But I just want to make sure that the board understands that there's a few key positions here that we really need to address. In January, we received a presentation from the sheriff's office to address some of the safety needs in the community. So your board requested staff to look at that and address that this year. And a lot of those other positions that are on the left-hand side under new positions are all brought in using outside non-general fund money. It's other sources of money. I just want to make sure the board was aware of that.
Okay, thank you. Melinda?
Okay, and then there were more requests for vehicles than we were able to fund this year. The sheriff's department is going to be replacing a vehicle, and that will be covered through insurance reimbursement. These are vehicles that do not have any revenue to offset them that we're hoping to provide funding for. Would be 1 in the sheriff's office, 1 in the jail office, and 1 in the ag commissioner's office. And that's kind of a summary of where we are currently in our budget compilation. We're not quite finished, but that's pretty much the final. That's pretty close to the final. Do you have any questions?
From the board or comments? Okay, I'll open it up to the public for this part of the budget presentation. Any questions, comments? Okay, I'll bring it back. Supervisor Batella?
Yeah, I just have, maybe if we could get a list. This year, we're adding some positions, they're right here, new positions. And then last year, we added some positions, I believe. And I don't know if they've all been filled, but, the assistant CAO might have been in one position, a planner down in a planning department might have been a position, but I'm not sure where we stand on the added positions that we put on last year, if they've all been filled. But they're funded.
Yeah,
Yes.
okay. So that's correct. So we actually have been recruiting for those positions. We've offered the job in some cases. Unfortunately, we haven't been able to fill the positions yet, so we're still actively addressing some of our needs. So I don't know if you're asking, but do you want to report back of what positions we've added, what positions are filled, or you just kind of want
Just maybe a little summary of the positions that we created last year, as well as the ones that we're creating this year. I think the year before that, we're laying off people.
Yeah.
I just kind of want to see how we're trending
we can do
back
that.
the other way.
We can do that. And on our June 2nd afternoon board meeting, we'll give you that information. Yeah.
Thank you.
All right, well, thank you. Thank you, Melinda.
Okay.
And we'll move on to item number 6, CAO Espinosa.
Yeah, this is great work by Melinda and staff. I can tell you, the board has requested staff to put together a 5-year plan. There is a lot of really good information in this packet. We have about 30 pages in the presentation itself. It's still in draft format, but we feel pretty confident that it's almost ready to go. But we did want to share it with the board prior to us, basically adopting this. So Melinda here is going to go ahead and discuss this. We may tag team on this presentation, but we went back and forth with regards to how we wanted to present it. We could present just the graphs, but the content of the information is really good. So kind of wanted to highlight some of those key points. So Melinda's going to go ahead and do that, and I may highlight a few other points as well. So Melinda?
Okay. Last year, we spoke with your board regarding putting together a 5-year plan for the county. And so we've spent quite a bit of time putting together some information. A lot of what we talked about actually earlier today is in this plan. So I think the best way to do this is basically just start from the beginning and start reading it, and then pointing out some information in the various charts and graphs that are in here. Please stop me at any time. It's kind of a long presentation, so please stop me if you have any questions at any time.
Okay. Any questions at this time before she gets started? No. Okay.
Okay. I have to ask you one more time, Sarah.
Just have to use this side.
Oh.
Yeah, because the thing's
Okay.
working. Sorry.
Okay, so this is the 5-year plan, 2014, 15 through 2019, 20. So per the GFOA, which is the Government Finance Officers Association Best Practices Guidelines, the purpose of a financial forecast is to evaluate current and future fiscal conditions to guide policy and programmatic decisions. The purpose of the 5-year plan is to provide policymakers and the public an assessment of the county's current financial and economic condition and set forth objectives to achieve the next 5 years to enhance the overall services for the residents of San Benito County. The report includes a historical perspective on revenues and expenditures and a 5-year financial outlook beyond the adopted budget year. The value of this analysis is to give the Board of Supervisors, staff, and the public a tool to assist with strategic decision-making as they work to achieve the goals set forth in the plan. Current economic conditions. San Benito County was hit hard, along with the rest of the state, by the Great Recession of the mid-2000s. Unfortunately, due to an over-optimistic anticipation of a quicker recovery, along with the long-standing philosophy of being fiscally prudent with its debt responsibilities, San Benito County's corrective actions were taken later rather than sooner and were very drastic. While the rest of the state has already seen some positive movement in economic recovery due to the uniqueness of San Benito County, this recovery will not be seen by San Benito County at the same rate as its neighboring counties. Prior to the Great Recession, San Benito County has seen a healthy fund balance reserved through its policy of fiscal prudence. However, in its effort to continue to provide the same level of services to the citizens and employees, the county drew down on that fund balance. Unforeseen increases in personnel costs have been an especially hard impact to the county. The drastic measures taken by the county to address these costs resulted in dire cuts to the county department's infrastructure and services. In this last fiscal year, the county has worked with employees and labor unions to help reduce some of the burdens of these increases. These savings, along with reserves and tighter expenditure controls, have been used to strategically and carefully start rebuilding much-needed services and programs. Unfortunately, the county has a long road ahead of it to achieve fiscal balance and provide its citizens with quality service levels. However, the county of San Benito remains committed towards creating a fiscally, let me find my place in here.
Sustainable budget.
Sustainable budget. The past 5 years' history. Prior to 2008-9, the county's general fund enjoyed a healthy fund balance with revenues greater than expenditures. The overall combined fund balance was over $25 million at its peak. However, by the end of 11-12, that amount had fallen to less than $13 million, a decrease of 48%. The largest decrease was in was from 1011 to 1112 of approximately $5 million. Up to this point, the county had tried to stay afloat using fund balance. This was also the year drastic cuts were made to departments, personnel, and customer service. Fiscal year 12-13 was the first year of positive movement. However, this came at a huge price due to the drastic cuts of the year before, and it is still required to use one-time funding.
We have a question, Supervisor Batella?
Yeah, I don't necessarily disagree with anything that was, stated in this, some, written here, except I think there should be something mentioned about the OPEB and the liability of the OPEB prior to, prior to 2008. I don't think we really took that much of that into account, and that was a liability that was always hanging out there. And, since that time, I think the county has made significant strides in lowering that liability. And, I think that kind of has to be worked into the 5-year plan.
Right, that's actually coming.
Yeah.
Okay, I'm sorry. And so this is a chart of how the fund balance looked from 2003, 4 to approximately 10 years later. And yes, I think a lot of those questions will be answered a little bit further into the presentation. It's a long presentation. Okay, and so, and the general fund revenues were just over $30 million in fiscal year 7-8 and had dropped to approximately $26 million in 11 and 12, and that was a decrease of approximately 16%. And so this gives you, this following chart, general fund revenues by type, kind of shows you the total revenue and what types of revenue that we currently have. And then also the next chart shows you some general fund expenditures by type, how we spend our money, general government versus public protection, recreation, that kind of thing over from fiscal year 7-8 to fiscal year 14-15. With revenues declining and expenditures rising, the county was forced to take drastic reductions, mostly in the area of employees and wages, beginning with fiscal year 10-11. These drastic measures included employee furloughs, step freezes, small group concessions, and layoffs. Many services to the public were cut, office hours reduced, and program insolvency became an issue. A financial analysis of general fund services provided by the county that are not covered by government programs, such as in the health and human services area or child support areas, shows that the majority of services are in the public protection arena. These trends show that while costs keep increasing in the area of detention and corrections, areas that cannot be reduced due to the health and safety issues related to them, the county has had to make reductions in the areas that it can control. And some of these areas, if you look at judicial and police, you can see how those are in the darker blue areas, can see how the fluctuations in those costs have been versus detention, corrections, and other types of public protection. These services are paid for largely with property tax collections. During the Great Recession, property tax collection revenue was negatively affected. Unfortunately, part of the problem with the property tax collection revenue lies in the formula itself. With the implementation of Prop 13 in the early 1980s, San Benito County became one of the lowest recipients of property tax share in California. Of the 58 counties in California, only Orange County at 6 cents and Yolo County at 9 cents are lower than San Benito County. The overall average for California is 20 cents. So this kind of, this chart shows you where San Benito County is in relation to what are considered our comparable counties. San Benito County is kind of in a unique position where we're agricultural, largely agricultural, which is Fresno, Kings, Merced are kind of our comparable agricultural counties. And then Santa Clara, Santa Cruz, and Monterey are the our location comparators. The chart below shows how the impact of San Benito County's share of the $1 property tax would have an effect in the comparable counties if they have the same rate. So for example, let's look at the top ones. Fresno County receives roughly 13 cents of their property tax dollar. Their assessed value is obviously bigger than San Benito County at $60 billion. And so they receive roughly $78 million worth of property tax. If they were in San Benito County, they would receive only, and received 10% on the dollar, they would only receive roughly $60 million. And that would decrease their revenues by approximately $18 million. So this chart's to kind of show you how the 10% would affect these other counties that are receiving more of the share of the dollar than San Benito County. Santa Clara County, while they have a very large assessed value, if they received only 10 cents on the dollar, their revenues would be decreased by $30 million. Other governmental services related to the economically disadvantaged are largely paid for through federal and state reimbursements. Revenues have, for the most part, kept up with expenditures and have not required such dramatic cuts to their programs as in the general fund. These are all the other types of funds: human services, child support, mental health, behavioral health. This kind of shows you how their revenues have been tracking, and then also how their expenditures have been tracking. The future 5 years. As San Benito County emerges from the Great Recession, it is important to plan for the new and changing economy. The county recognizes that the impacts left by the Great Recession were deep and will take planned and thoughtful insight to move toward a healthy financial balance. There is a lot of work to be done to achieve this goal, both internally and externally. Externally, the county needs to be prepared for another housing boom and plan for the infrastructure and services that come with this scenario. There are currently large housing developments in the pipeline. The county must also decide which asset venues currently exist within San Benito County that can be expanded and capitalized upon to bring enrichment and financial support to the county. An analysis should be done with each potential housing development or major project as to the impact upon services within each TRA required by the County of San Benito. These would include areas in public protection, infrastructure, and technology. It would be imperative to create funding sources designed to have fiscal neutrality to the county. Internally, there is a lot of work to be done in order to have the services ready to address the external conditions. Staffing levels and morale are at an all-time low. Infrastructure related to technology and space were put on hold during the Great Recession. Costs keep rising and revenues are not keeping up. The majority of the revenue received by the county is dependent on the external conditions: property tax, sales tax, charges for services, as noted in the previous topic. Infrastructure has been allowed solely on the basis of revenue from outside sources at no cost to the general fund. The current status. Fiscal year 12-13 ended the year in the black for the first time in over 5 years. However, that came with a huge cost, as we have seen in the above paragraphs. Even with all the drastic cuts, payroll continues to represent approximately 3/4 of the county budget and continue to remain the largest growth in expenditures. This is based upon our budget for 14-15. This was how our general fund expenditures broke down. As you can see, services and supplies were 37%, and the rest of our expenditures were related to salaries and benefits. This is also a look at authorized positions within the county over the last 7 years. As you can see, the general fund, which is in the blue, those positions have decreased drastically, while the other funds have remained relatively the same, if not increases in their positions. And the general fund has, in the last couple of years, tried to start building up their personnel. This is a look at medical premiums, annual average cost per employees. From 09 to 13, this was the cost of medical insurance, even though we had reduced roughly 100 employees in the general fund. In 14-15, this is the year we worked with unions to put caps on, and so now we are anticipating 15-16 through 19-20 to remain pretty status quo. This is a look at PERS rates. PERS rates for the miscellaneous group, we're anticipating that they will continue to increase between 1% and 2% each year. We started this with the safety group. However, the CalPERS kind of threw us a little loop this year where they now divided PERS rates into two pieces. There's a rate piece and there's a specific dollar amount. So we weren't quite able to continue the PERS rates projection through the next 5 years. But as you can see, PERS rates have been steadily increasing on the safety group also. In the middle of the Great Recession and dealing with the increase in payroll costs and the decrease in revenues, GASB 45, which was OPEB, came into play. OPEB is the accounting for retiree benefits for both the current retirees and the future retirees. As you can see from the chart below, millions of dollars had to be diverted to OPEB expenses, money that was no longer available to be used for the county operations. And per the most recent actuarial study by Nyhart, the OPEB requirement is expected to drop approximately $1 million due to these implemented changes. At the time we put this together, we didn't have the additional actuarial, and so we are anticipating that the 15-16 year will decrease even more from there. So this was a little bit before our last actuarial. In fiscal year 13-14, the county felt it needed to address some of the issues in order to bring some measure of control and to begin to bring about a change related to the ongoing increasing costs related to payroll. The furloughs and step freezes were lifted in an effort to give relief to the employees. Additional personnel were authorized in specific areas to begin addressing the program insolvency issue. Items the county had tried to keep afloat were capped or moved to employees, such as healthcare premiums and the employees' share of PERS. The capping of these costs were negotiated with labor union groups and can be renegotiated as the economy improves. Again, in fiscal year 14-15, additional personnel were authorized in areas related to revenue growth, such as planning, public works, and property assessment. The implementation of the new ERP was started in 13-14 to bring commonality and better information to departments and employees. Infrastructure remains funded with fees and reimbursements that have no cost to the general fund. The funding of OPEB remains a high priority. However, various one-time monies have had to be utilized in order to address some of the personnel issues. There are many departments that are still in need of being addressed regarding staffing levels, technology, and infrastructure. The demographics of San Benito County, the locations.
Melinda, I would suggest just from here on out, let's just highlight the actual slides and
Okay.
highlight the key points within each one in the matter of time. Okay.
So in our demographics, where we as San Benito County residents work. As you can see, 52% of San Benito County residents work in San Benito County, and 37% work in Santa Clara County, Santa Cruz County, Monterey. This is kind of a crazy looking chart, but it shows our comparable counties where residents are employed, what type of industry they're employed in, agriculture, construction. And so as you can see, San Benito County follows the same trend as the rest of our comparable counties. These are earnings by household, and again, San Benito County falls into the same trend as the rest of our comparable counties in California, and the types of earnings that they make, employment earnings, Social Security, that kind of thing. This is called per capita personal income. San Benito County is in the yellow. We rank 35, I think out of 58. Number 1 is the best. Santa Clara, Santa Cruz, Monterey, which are our location counties that are closest to us, rank 4, 11, and 22. The rest of these counties that are kind of in the same area as San Benito County are basically smaller rural counties up in the northern area of California. And then I also put in here Fresno, Kings, Merced, because these are largely agricultural counties, and they actually, per capita income, have worse PCPI than San Benito County. Within San Benito County and some of our close counties, there's a lot of discrepancies even within the medium household range. San Benito County, you can see Hollister and Tres Pinos. Tres Pinos is a little bit higher. San Juan has less medium household income. Aromas has quite a bit more. California, which is the green one, is right in the middle. San Jose, Santa Cruz, Monterey are the pink ones. Those are location-wise are close to San Benito County. And then also, I put in Salinas just as a comparator too. Okay, so what is the
Madam
future
Chair,
look like?
I just wanted to add,
Yes,
so when you
please.
actually look at those 4 within our county, when you actually take an average of them, it's about $61,500. So you're looking at that being above California's average and less than obviously San Jose, but it gives you kind of a good idea of our county as a whole.
Okay.
Okay, so what does the future look like? Achieving a fiscal balance. The question now becomes, how do we address the current economic phase to plan for the next ones while achieving fiscal balance? A survey among the departments ranks the following items as top priorities in the coming 5 years. In order, excuse me, to effectively and efficiently meet the needs of the community. Staffing resources and service levels, recruiting and retaining qualified employees, technology and tools, excuse me, having the proper equipment available to service customers, infrastructure providing the appropriate service expectations of the community. And the following are the following projections of revenue and expenditures for the next 5 years. This information is based upon the current status of the county's budget and focuses just on the general fund, as the other funds are relatively viewed as being self-sustaining through governmental subsidies. The projections are conservative in nature and reflect currently known scenarios. Payroll expenses, an increase in PERS, court security increase, staffing of the jail expansion, step increases, annual increases in personnel, and the commitment to the OPEB ARC requirements. In operational expenses, a status quo with anticipated inflation increases of 3% per year. Fixed assets, a minimal technology and infrastructure upgrades, vehicle replacements, limited to approximately 2, contingency, minimal amount to address unforeseen events. And so this is basically where we see projected expenditures and projected revenues. If you put those 2 charts together, this is what we're looking at in expenditures and revenues. And as you can see from the above charts, revenue streams are not expected to keep up with the expenditure requirements. And so San Benito County needs to develop a strategic plan to address this issue called the gap. Then we have kind of 6 questions regarding some ways to address the gap. There's 6 questions. The majority of our revenues come from property taxes, and so we need to kind of, do we want to create new revenues or not? And then some options for doing that. Prior to the Great Recession and currently, San Benito County relies primarily on revenues from property taxes and federal and state reimbursements or programs. During the Great Recession, due to the economic impacts on home values and ownership, property taxes were affected in a negative way. The state and federal government also cut allocations to counties by either cutting program subsidies or shifting costs to the counties. One of the biggest cuts was in the Williamson Act subsidy of almost $750,000 annually. This was a huge impact to San Benito County due to its largely agricultural base. Current and future demands of increases in services and programs have been forced upon the county in court security and jail operations. However, the state has not been forthcoming in funding streams. The Great Recession has major impacts upon the state and federal levels, and counties will continue to feel those effects as the nation continues to come out of the debts left behind. San Benito County needs to do an assessment of what its future economy will look like. Do we continue to rely upon past revenue streams and try to enhance them at some time, or do we look in new directions? We know the cost of operations and personnel will continue to rise, and we know we are facing a new housing boom, and that brings the needs for services and infrastructure. We know that there are a lot of private business movement in the tourism and recreation areas. We know that technology and facility infrastructure needs to be in place for viable community needs and services to be met. This is probably the #1 issue to be addressed in the county. And then what are payroll benefits going to look like, and how do we control these costs? A couple of options there also. In an effort to maintain a status quo employment base and compete with our surrounding community arena, the county continued to offer the same level of benefits to its employees, even as those costs increased. That status quo came with a high cost and affected the number of employees it could sustain, the level of services it could provide, and employee morale, as it created a division between the have and the have-not funds. The general fund was the have-not funds and felt the biggest impact. In fiscal year 13-14, the county took strides to address these issues. Realizing it could not continue to operate this way, labor negotiations were enacted to begin to control the costs, and new positions were strategically placed to start rebuilding a more effective workforce. Expectations within bargaining units were established. Labor costs will continue to increase with new personnel and rising benefit costs. The county needs to continue to focus on these costs. Some can be controlled, and some, like OPEB, need to be analyzed on an annual basis. The intent should be to balance the quality of workforce against the cost of that workforce and make appropriate cost-sharing determinations. The county and employees need to work together to be a unified force in serving the citizens of the community. Some other options on ways to fund technology and infrastructure. Technology and infrastructure have largely been funded with monies that do not impact the general fund. That is to say, a source of revenue must be identified in order to allow that expenditure. With the downturn of the economy, many of those funding sources were not available. Impact fees were down, state and federal dollars were not available for infrastructure projects, and reserves were spent to maintain operational costs. Therefore, a lot of updates and new projects were put on hold. In the meantime, the technology world kept moving and improving, and community expectations kept evolving. San Benito County, along with other national jurisdictions, find themselves in a mode of playing catch-up. We probably have more current technology tools at our personal residence than we do at our office. Our personnel communication has outpaced our work-related communication, and is causing a new level of frustration internally and with our customers. What should be our goals in addressing these issues? What policies do we need to implement? #4, what policies do we need to implement the strategic
And I'm going to stop you right there, Melinda. We have probably about another 15 minutes before lunch. What I'd like to do is for you to kind of summarize, so we can leave another, at least 5 minutes for the very last one. Because this is great information, but I think that, like, the planning that is that's being addressed
I'll
here.
just move on to the conclusion.
Yeah, please, thank you.
Okay. The conclusion, we embarked on this project around the beginning of fiscal year 14-15. It was compiled from information we knew at that time. Some of the demographic information was challenging to find, as San Benito County is often included with Santa Clara region, Monterey Bay region, or even the Central Valley region. Fiscal information and future projections were based on issues we knew were going to affect us within the next 3 to 5 years. As we have seen from July 14 to today, events happened that are beyond our control. We had unforeseen events related to maintenance breakdowns, timely CAFR completion, hiring and retention of personnel, and Measure J, to name a few items that impacted our already thin budget and resources. We're in the process of compiling and presenting a new fiscal year budget. The requests from departments to help meet their service goals are many, and the revenue needed to meet these requests is static. Often we think of ourselves in a very unique position as we compare ourselves with other counties around us. Some of our neighboring counties jumped on the economic recovery wagon, excited that the Great Recession appeared over. They increased wages and added personnel, invested in technology and infrastructure. Why didn't San Benito, some people ask? Some of those very same counties are facing unexpected budget gaps now because the economic growth seems static. We have always been prudent in our approach to finances. We have not gone into debt without a clear picture of how to pay for that debt. Road maintenance has been a big topic in San Benito County and the city of Hollister. And how can we finance the needed repairs? We're not alone in facing this issue. A recent article regarding Monterey County stated that approximately 99% of their roads are also in need of repair. San Benito County may be smaller than our neighboring counties, but we face the same problems as they do. We need money to help pay for the services we need to provide. Perhaps the one area we do not share with them is a clearer definition of how we want others and ourselves to perceive this wonderful county, and then ultimately expand upon it to help pay for the services we want to offer. We are not the Silicon Valley, the Beach Boardwalk, the Pebble Beach Golf Destination, the Gilroy Outlets, or many other name tags. But we have many things to offer residents and visitors. And therefore, our final question is, how will we close the gap that is preventing us from providing the best services we desire for the residents of this county? I apologize, it was a very long presentation.
No, but it was a very important presentation. It's the first time that we've had that long an outlook, and so it was important. Thank you so much, and thank you for all the work that you and others put into it. Do we have questions from the board? Any comments?
No, this is good, and there's a lot of information here, and there's still a lot of questions that need to be answered as far as how the county goes forward in the long term, and as far as meeting our obligations to and services that should be provided to the public. We have talked about impact fees, and those are just one-time costs, but also a general government type of impact fee as well. There needs to be a kind of a balanced approach how we have to meet expenditures and revenue.
We do. There's that
We
gap.
can't maintain that gap going forward, and I think that's kind of something that this board needs to really look at and utilize this 5-year plan. That's the value of it, is how we close those gaps by
Exactly.
whatever means. And we should be working on that right now as far as changing some of our policies, looking for new revenue sources, and changing that balance that we've had in the past going forward. So I really appreciated this. Thank you.
Yeah, thank you, Melinda. I'll open it up to, go ahead, CAO, and then I'll open it up to the public for comments.
Yes, so internally, we have been discussing this, and, one of our recommendation is to create an executive committee or some sort of, ad hoc or something to look at this. And Supervisor Botello is correct. We really need to look at the fiscal neutrality. We need to look at the sphere of influence, what those costs are. And most importantly is just being fiscally neutral and what the true cost of government is and accounting for that. And that's really kind of what we need to address. And I think that'll help remedy that gap or bridge that gap. So I think that's more or less it. I think what we want to do is come back and it'll be a little bit more formal with that and start building a strategy and move forward with really accounting for that.
Yeah, because I know that this is going to raise for us a lot of questions. Okay, how are we going to deal with this 5-year plan that certainly there's, like Supervisor Bertello said, there's that gap. So we have to start the planning now. So thank you. We will come back, put it on an agenda item for discussion. So, anybody from the public that would like to come up and address this 5-year plan presentation? There being none, we'll go ahead. This was a presentation only. And any other discussion? Then we'll just move on to the last item on the regular agenda, number 7, CAO Espinosa.
Thank you, Madam Chair. Yes, this item's going to be coming out of our office as well, and we have Sarah Fontanas here. She's going to be presenting this item, and this item is with regards to our integrated waste office. There was an ad hoc subcommittee created and also met, and she'll be presenting a report with regards to the change of law, cost, as well as the COLA for waste connections. So, Sarah?
You all should have the handout. It should be about 3 pages in front of you. If this is up there, yes. So I'll make this quick as I can. Number one, before I get to the landfill, as part of our regional agency duties, I wanted to inform you and everybody here of a grant program that we have funded called Refuel Your Fun. It is something kind of excited. There are now 1-pound propane refillable tanks that you could use at your barbecues, tailgaters, camping trips, basically fuels your stove. So rather than buying one and throwing it out and putting it in the landfill, you can now go to Hollister True Value, either exchange what you have or buy refillables, save some money and the environment as well. So switching gears back to COLA and change of law costs, what you have in front of you is part of our contract with Waste Connections, our current landfill operator at John Smith Road. As part of our contract, there is an annual COLA that is a 2% floor and a 6% ceiling. In 2015, you were looking at the cost of about $125,000. That is on your summary page. We had a small amount of $8,000 from the last year. So this year's total for COLA is $133,424. Again, part of our contract language. Looking at change of law costs, we had $305,363 spent this last year, and that's mainly because of AB 32 having to do with greenhouse gas. I was told by the site manager that the first element of these costs was the construction of a fully operational gas collection and control system, which totaled $301,363 and was completed in 2014. The second element of AB 32 required quarterly surface emissions monitoring once that gas collection and control system was fully operational. That was an additional $4,000. So that's what that total for change in law costs is there. If you add those two together, it is about $439,000 we're looking at, $250,000 of which was budgeted last year. After speaking with the ad hoc committee, they are recommending a rate increase, and it is a rate increase of $1.75, and it is not on fees across the board at the landfill. It would actually be on fees for materials that are buried in the landfill. As part of that, they are termed refuse or solid waste. The compacted franchise solid waste, packer materials, so the things that are coming in from businesses like Recology, and residual solid waste, which Waste Connection terms waste that remains after the recycling process. So the hope here, and this is actually, as our consultant has provided, a best management practice. It's going to help us with our diversion requirements by charging more for basically what's put in and leaving those fees as they are for others that would actually be diverted or through some recycling program. This $1.75 increase would cover our costs for this year. AB 32 was a big one, and that was something that, it is hard to predict what those costs will be. So, let's see, $1.75, I think that is what I had and what the ad hoc committee recommended. I did attach the 2013 rates and what those adjustments look like, and you will notice those were across the board. So if there are any questions, the recommendation would be to increase those 3 areas by $1.75, and you can see on the handout what the new rates would be. $61 for refuse would go to $62.75. The packer material would go from $43 to $44.75, and residual waste would go from $30 to $31.75.
Well stated. Thank you, Sarah. That is exactly what we discussed at the ad hoc committee. And we felt that, you know, some of these costs are unavoidable because they are by contract based on changes in the law and also the COLA. So Supervisor Munzer and I felt comfortable making this recommendation after that review. And so I'll ask right now, if there are any comments or questions from the rest of the board? Well, Supervisor Munzer, please.
So,
More.
and again, if you mentioned it, Sarah,
Yes.
I apologize, I didn't catch it. But we have not increased the rates
Since 2013,
for
yes.
2 years. And our estimate, this rate increase monthly for the
Yes.
homeowner would be,
Well, so the landfill, this would basically affect the tipping fee, the trucks dropping stuff off at the landfill, but that does in turn affect our homeowners, or about 75% of our residents in the county, because of their trash bill. And it will increase that. Recology also gets an annual rate bump because expenses constantly go up. Their rate increase is looking at about 34 cents. What this adjustment of $1.75 does to that is adds on about an additional 13 cents on their monthly bill.
so basically this is only adding to our household 13 cents a month.
Correct.
Take that.
Exactly. Okay. So any other questions or comments from the board? Any comments from the public? Or questions?
Marty Richmond from Hollister. You know, it always aggravates me when someone says it's only 13 cents, because there's 5,000 people lined up saying it's only a dime for me. Unfortunately, 5,000 times a dime is a lot of money. So the state does the same thing on my license fee and everybody. Here's my problem with this. And if I have my numbers wrong, I apologize, because I haven't had time to ask for a Public Records Act number accountability, so please forgive me. I understand that in the closing fee deal, where you guys got the closing fees back, you got about $4.2 million. I don't know if that's the accurate number. Some portion of that came from the ratepayers, and that was originally put in as part of an enterprise fund. And I believe that money belongs to the ratepayers, no matter how you got it. If you take that money and then you use it for something else, and then charge us for the fees, in my opinion, you're doing a backdoor tax. That's all you're doing. Now, if you seeded money from the general fund into the closing fund and land fee, you deserve to get it back with some interest rates, whatever the interest rates were. If you lent the money, you certainly deserve to get that back. If it came in as part of the outside trash, you certainly deserve to take that away. But if there was money put in there as part of our monthly fees that went to the closing funds, that wound up, that you trying to put it back in the general fund, you shouldn't be charging people more money. And I understand it's only 13 cents, okay? But you know, only adds up to a lot, because, like I said, everybody's lined up. So there's 300 and some odd tax areas here, 5,000 taxable agencies in this thing, and everybody from Caltrans to the governor to the counties to you guys to property taxes to sales taxes to licensing fees, which are going to go up again, and so is the gas tax. Everybody's only getting a few cents more. Unfortunately, that few cents, the government is not giving me any money to offset that few cents. They're giving me the CPI that runs in the United States average. They're not giving me the CPI that runs in California, and they're not giving me the CPI that runs in Northern California. So basically, your budget may be doing okay when you do this, but my budget's being shot to hell, okay? So I appreciate it if you would take the appropriate amount of money out of the closing fees, which you're trying to pocket into the general fund, and pay this bill. Thank you very much.
Thank you, Marty. Okay, any comments? Any other comments from the public? I'm sorry, before we move on. Okay, Supervisor Patella?
Yeah, I think, Marty, you have some really valid argument points there. And, you know, what we ended up doing was, you know, transferring that closing cost responsibility to the operator, and we're being able to utilize the that reserve back to our, you know, to our general fund. And, you know, it's a hard thing to go back to the ratepayer because we have new businesses, new growth. You know, what I paid is a lot different than what you paid for garbage, and how do I get my share back without it being, you know, I think equity would be a problem with what you're asking for us to do with that reserve. I don't see that, you know, being quite fair no matter how you cut it. And going forward, the citizens are a benefit greatly by having that landfill reserve in the general fund, and that will be a more equitable distribution of that benefit from my perspective.
For services, I'm assuming you're...
Right, and that's why I'm a, you know, support, you know, the committee's recommendation to increase the fee, but you know, we certainly, I'm not sure how else you could equitably be fair about it. So.
Supervisor, thank you, Supervisor Patella. Supervisor Munzer?
And thank you, Madam Chair. The other issue that has to be stated is we have actually not rolled that closing costs fund into the general fund per se to where we could spend it. We also have a large liability in the fact that we own the landfill. If anything goes wrong at the landfill, that liability is on our shoulders. And my feeling is that money needs to be kept in a designated fund balance to deal with that issue. Yes, the operator has taken over the closing costs, but it has not taken over all the liability. If there's anything that ever goes wrong again, and it already has once, and if it goes over again, and it's been said that it's not a matter of if, but when something goes wrong with a landfill, we're going to need some money to deal with those issues. Thank
And
you.
that money will be coming out of general fund if that were to happen.
Exactly.
Yeah.
Exactly.
Okay, any other comments? Okay, I'll entertain a motion then for item number 7.
I'll make a motion to approve for the rate fees increase per the committee.
Will your motion include to set the public hearing for these rate increases?
Yes.
Okay.
I'll
All right.
second that.
There's a motion and a second. Any further discussion? All those in favor?
Aye.
Opposed? Motion carries. Okay, that concludes our meeting. I'll entertain a motion to adjourn.
So moved.
Second.
There's a motion and a second. Our meeting is adjourned. Thank you so much.